The New York Stock Exchange officially betting on Bitcoin. The exchange's parent company, ICE, launching its long-awaited Bitcoin futures market last night after months of regulatory delays. Joining us now to discuss in a CNBC exclusive interview, Heath Tarbert, CFTC chairman. Very good afternoon to you. Thanks for joining us.
Great to be here. Thank you so much for having me.
Let's start on the topic of crypto. Lots of debate as to whether this should be something that's fully authorized and regulated or whether it's more of a sort of dark asset. Where do you stand on that and the importance of having proper rules and regulations for it to trade in the U.S.?
Very much want proper rules and regulation. And what I would say, as sort of a larger point, is I believe the blockchain technology behind Bitcoin and other digital assets has a lot of promise. And I would hate to see a country such as China or another strategic competitor advance farther along than us because we don't have the proper regulatory framework.
Is Bitcoin itself a commodity, a currency, or something different altogether?
To some extent, it's a legal question. And under our statute, a currency is very broadly defined. So in most cases, most digital assets are a commodity, but defined as a commodity under our statute. Hence, we have regulation over the futures contracts.
How much demand is there actually for Bitcoin futures and other products? And do you only see that demand when the price goes up?
It's a great question. It's definitely that the demand is far below we see for other commodity classes. So it's still small at this point, but I think we see it growing.
You partnered recently with the DOJ in terms of some investigations into some potential accusations of spoofing and market manipulation by commodities traders. The allegations are directly at the traders, not at the banks necessarily. I listened to the call from the DOJ recently on that, and they talked up a lot about big data and AI as being something that was used to track the accused wrongdoing in these cases. How important is that as a tool to you guys? And does it mean that in the future it'll be very, very hard for traders to kind of break the rules based on the kind of increase in data that you have?
Yes, absolutely. It's very important, and I think what you're going to see is a new era in CFTC enforcement, relying on big data, relying also on partnerships with the FBI, the Department of Justice, as well as other regulators. That's something we're going to be continuing to do in the future. Since I came about 60 days ago, we've already brought or settled 21 enforcement cases.
One of the ideas in the rounds of regulation after the financial crisis was that a lot of activity would perhaps be migrated over to the listed futures market, the regulated derivatives market, as opposed to over-the-counter. Has that happened? Has it been a constructive development? I mean, do you feel like you have a good window on all that's out there in terms of, risk that's being taken in the system?
Yeah, we feel that we do have a good window, and a lot has, in fact, moved from the uncleared space to the cleared space. That said, we still have very large OTC markets, and we're continuing to improve the reporting in those areas.
Clearing of derivatives has been a big area of focus around Brexit and whether things would continue to go smoothly. Some temporary regulations have been passed so that it can continue. What's your take on that? Do you think the banks are ready, or could there be some major sort of outages and volatility around Brexit?
In the cleared space, it's very important that the EU recognize the UK clearinghouses, because if they don't, then 90 days before that, the European members of those clearinghouses will have to leave. And so we worked constructively with the Europeans and the British to make sure that happens.
President Trump really campaigned on deregulation and making it easier for banks and sort of loosening regulations post-crisis. Do you feel that that's part of your mandate? And if so, have you moved in that direction?
Well, one of the things we're seeking to do is to recalibrate regulations. The Volcker Rule is a great example. I put in my statement that it was one of the most well-intentioned but worstly implemented regulations in the history of American finance. And one of the problems was that for Main Street institutions, our local banks and regional banks, they had to comply with a bunch of stuff that really shouldn't have been addressed to them, and we fixed that.
All right. Heath Tarbert, thanks for coming in.
Thank you. My pleasure.
Checking in.